at the half-year mark, capital appreciation has grown its top line by 10.4%, driven by a diversification of revenue sources as the fintech group's two divisions attracted new clients and managed to renew long-term contracts. This growth, however, did not filter down to its bottom line. Headline earnings per share fell by 8.3%, but despite this, the interim dividend has been hiked by nearly 6%. Company CEO Brad Sachs joins us with his take on the performance. Brad, thank you so much for your time today. Now, Brad, it seems like it's a tale of two quarters. One quarter was downbeat due to low business confidence, the other quarter showing an improved performance. Walk us through the company's financial performance and how the macroeconomic environment weighed on the bottom line.
It was a tale of two divisions. We have two divisions. We have a payments division and a software division. Our payments division was able to post revenue growth of 18%. And our software division was only able to post revenue growth of 10%. But importantly, within the software division, we had anticipated doing much more than that. And we were resourced to be able to execute against that higher level of activity. And when that activity never came through, we still had to incur the costs associated with that because our stock in trade, so to speak, is our people. And so we continue to have employment costs that we had to absorb during this period, and that had an impact on our bottom line. So although we did well on a top line perspective, we never had the increase in profitability that you would normally anticipate because we had expected to do even better than we did on a top line basis.
And are there plans to mitigate, those costs that you are seeing in that software unit?
So we have very deliberate plans in place to do that. I described it, our superpower is our people. And we have made a very deliberate and definitive decision to invest in our people, to position ourselves when the market does turn around, because we believe that the slowdown in demand is a transitory issue as opposed to a fundamental change in the demand for technology and software going forward. So we have recalibrated our sales process. We have recalibrated our execution activities. We have looked not to continue the same pace of hiring resources that we had in the past. So we've slowed that down. When there's been somebody who's left us, we haven't immediately replaced them. So we're having a natural attrition within the group. Our retention rate is still materially higher than industry averages, so we're very pleased about that. And so we continue to look at ways to optimize the operations, and it's a continual focus of our management team.
Brad, the group operates in an ever-changing environment, an ever-changing sector, to be particular, now that we are seeing that AI trend really gaining traction and everyone's, trying to get a piece of the pie. In the rapidly evolving AI landscape per se, how is capital appreciation positioning itself to capitalize on the emerging opportunities on that front?
So the ever-changing environment is what makes life exciting. We like to be at the forefront of that, and we continue to think that that's one of our capabilities, is we continue to innovate and push the envelope. AI is certainly one of those areas, and we have used our capabilities to empower all of our staff with AI capabilities. So we have deployed co-pilots within our development team to help expedite the development of technology. That does a number of things. It continues to keep our employee base current and contemporary with respect to innovation. It helps us to reduce costs. It helps us to deliver better solutions to our customers, and helps us to understand the types of opportunities that are available to our customers for deployment within their environments. So overall, AI is probably one of the most important technological events, not only in 2024, but I think it's probably going to be of this decade, at least, if not of the 20s and the 30s.
Brad, correct me if I'm wrong here, but you do seem really positive about, prospects moving forward. And I'd just like to get maybe your analysis on the growth environment in South Africa and how conducive it is when it comes to doing business here. We've just received the GDP print, really seesawing their growth when we look at it overall. That third quarter GDP contracting by 0.3%. Yes, we do know sentiment is upbeat, morale has improved, but it doesn't seem to be translating into actual growth.
So we are upbeat about our future, and I think you are right. We've started to see an increase in the level of activity and excitement in conversations with clients, but we actually haven't seen that come through yet in their commitments to new projects. So I do think that there is a lag, and there's going to continue to be a lag in the translation of sentiment through to activity. Part of our positive outlook is tied not only to South Africa, which I continue to believe is a challenged environment for lots of reasons, and it's beyond the scope of this interview to talk about those things. But South Africa continues to be a challenging environment, but the benefit of technology is that you can scale globally very quickly. And so, for instance, we demonstrated one of the companies that we highlighted by use case example, one of the companies that we invested in called Asset Pool. It's a startup company, but is today, even in startup mode, available in almost 50 countries around the world, 39 countries across Africa. Its technology is being used, and that's a result of the way technology is deployable and implementable today. In the past, you would have to take many years to be able to be available in so many different jurisdictions. So from our perspective, our ability to compete in international markets of a South African cost base is a compelling competitive advantage, and we do find that the skills that we have are comparable to what others have in other jurisdictions. So overall, I think as a group, we are very well positioned, not only for the South African market, but for other international jurisdictions too.
So diversification proving to be the name of the game for capital appreciation. Brad, thanks so much for your time and those insights. That was Capital Appreciation CEO Brad Sachs.